The stock market closed strong yesterday, and the S&P 500 closed for its fifth consecutive positive session. This gives the stock market some more momentum because the stock market on all three major indexes for the Dow, S&P, and NASDAQ were up for 3 consecutive weeks. This extra momentum from yesterday should likely bring the market a little bit higher this week. I mean, we saw record highs in Microsoft and NVIDIA. Microsoft's record high was partially due to Microsoft hiring Sam Altman, and NVIDIA's record high was a mixture between momentum in the market and then anticipation of NVIDIA's earnings that are coming out today. We also had a good note from Bank of America's analyst, equity analyst, pretty much saying that she expects the S&P 500 to hit a level of 5,000 by year-end 2024. She thinks this for a few reasons. First, she thinks that there's a lack of conviction among bears. Bears aren't overly selling the market down at this point, at least no longer. And we're not at the euphoria stage of extreme greed necessarily yet for the stock market. She also expects declining inflation, not deflation. She doesn't see prices going down, but the rate of increase in inflation going down being good news for equities, as well as profit margins increasing. And then next year being an election year should bode well for the markets, although we might see some choppiness in the second half of next year right before the election, which is normal. But overall, but also lastly, combined with U.S. exceptionalism and pretty much the U.S. reshoring manufacturing and investments in technology onshore, as well as baby boomers starting to transfer their assets to millennials, that wealth transfer. She really expects that sets the stage for a strong stock market next year to 5,000. Honestly, I think it could be a little bit higher. I wouldn't expect 5,400 by end of next year. And then the following year, 2025, I think will be flat to maybe 5% down. But a lot of her points are right for next year being strong. We're seeing a lot of positive developments now in declining or disinflation starting to happen. I think this is especially true because 2 years ago, the NASDAQ hit its peak, and the NASDAQ isn't quite there yet. Pretty much the stock market has gone nowhere over the last 2 years. There's still a lot of pent-up momentum that needs to happen, which should likely propel the stock market further, in my opinion. And even if next year, if the Federal Reserve keeps rates higher for longer until next year, maybe possibly starts cutting rates next year because of some economic weakness, I actually think that'll propel markets even higher, especially for tech and crypto, especially for crypto, because crypto and Bitcoin's not necessarily a hedge against CPI inflation. It's more trades in tandem with liquidity. And if we're in a slowing economy and the Fed's quantitative tightening or selling assets off their balance sheet stops and going into also cutting rates, that adds more liquidity to the system, which is good for Bitcoin and tech stocks. Bitcoin specifically trades more in terms of the liquidity, and more in proportion with liquidity as opposed to CPI inflation, because liquidity usually comes before inflation. Going back to 2020 and 2021, when there was more liquidity in the system, Bitcoin and tech stocks pumped. And that was ahead of the inflation we saw, because that was anticipation of that. And investors trade and invest in anticipation of these kinds of things. So I think the Bank of America's analyst is right in terms of next year being a strong year, but I think it'll be even stronger in my opinion. And then I also wanted to touch quickly on a few other news stories. Going back to yesterday, we saw a good Treasury auction for 20-year Treasury notes yesterday, which is a good sign for the Treasury market, which made Treasury yields come down a little bit, helping the stocks yesterday. And then we're also seeing some good signs with gas prices. Gas prices could likely fall to $3.25 by Thanksgiving. This is the 8th or 9th consecutive week of declines. This could be the lowest Thanksgiving since 2020, which is great news for consumers and more evidence of declining inflation being good for markets. It's something that the Federal Reserve wants to see. And then I also wanted to go quickly back into Bitcoin. Although I see next year being good for Bitcoin based on what I was talking about a few seconds ago, we're seeing some good news in terms of the SEC working with ARK Invest in terms of ARK updating their spot Bitcoin ETF application. It's good to see the back and forth of that. So that's good news. One bit of bad news, though, is that we saw the SEC institute some enforcement actions against Kraken, crypto exchange Kraken, saying some tokens and cryptocurrencies on their exchange they think are unregistered securities. Kraken disagrees with it. The SEC is trying to really use a regulation by enforcement approach and not really providing clear guidance. Although this is something that Congress is working on right now, and Congress should really do. That's a little bit of a slight headwind for crypto, but hopefully with the spot Bitcoin and Ethereum ETFs hopefully getting approved soon, hopefully by January of next year, that'll override some of the SEC's enforcement actions against crypto exchanges like Kraken. But we'll have to see. But either way, there's a lot of bullish catalysts for crypto coming into next year, especially before the supply shock of the Bitcoin halving by about April of next year, combined with increased demand from the, hopefully at least the spot Bitcoin and Ethereum ETFs. And also, as I said previously, with the liquidity cycle, with hopefully the Fed's quantitative tightening being done, and if the Fed cuts rates, investors pricing that in, that all that together should hopefully shoot up Bitcoin's price next year.